Hello and welcome to the channel. I appreciate you stopping by. This video covers price action, market trends, and analysis for the week, along with a look ahead for the upcoming week. We'll take a look at the market performance and SPX price action for May 9th, 2025, along with price targets and key points of resistance. We'll review the sector action for the week, along with a look at some of the major indexes. We'll highlight some of the major economic data releases upcoming this next week. We'll also take a look at the CME Fed Watch Tool to see how the market is pricing in the expecting Federal Reserve rates following this week's Federal Reserve policy rate decision. At the Friday close, the Dow was down 0.29%. The S&P 500 was down 0.07%. The Nasdaq was flat for the day. The VIX was down 2.58% to close at 2190. When we look at the sector action, we can see that energy, real estate, and consumer discretionary was at the top of the leaderboard for Friday. At the bottom was communication services, consumer staples, and healthcare, which were all in the red. For the major indexes for the week, small caps were actually up 0.52% for the week, along with mid caps at 0.49%. The Dow Jones Industrial Average was down 0.16% for the week. Nasdaq 100, 0.2% for the week. Dow Transportation was down 0.26 for the week. And the SPX 500 closed down 0.47% for the week. Looking at the sector action for a 1 week time frame, we can see the industrial sector was at the top of the leaderboard with a 1.14% increase for the week, followed by utilities and the energy sector. At the bottom, we have healthcare, which was down 4.22%. Consumer staples was down 0.8%, and the real estate sector was down 0.76%. The SPX closed at 5659.91 on Friday, May 9th. It was down 0.07 for the day and 0.47% for the week. The SPX broke a 9-day winning streak to start the week. The index closed higher for 2 days of the week, but lower for 3. The 20-day moving average reversed course and is now on an upward trend. The 50-day moving average is still declining, with the 50-day crossing below the 200-day on April the 14th. The 200-day has reversed its downward trend on May 2nd. The anchored VWAP anchored to August 5th, 2024 is the only anchored VWAP line that I have on the screen that is still decreasing. The rest are increasing at this point. The March 13th low, which was retested on March the 31st, has become a support line that was broken on April the 3rd following the tariff announcements. We tested the level from below on April 25th, so this level once again becomes a support line. The S&P 500 has consolidated this week around the April 19th, 2024 anchored VWAP. The index has retraced about 61.8% from its intraday low. And I suspect the index continues to trade for some time in this range as the market wrestles with the impact of tariffs, company earnings reports, and recession fears over the current quarter. The MACD is above the midline for both the momentum and the signal line. The RSI has decreased slightly over the week to rest at 57.47 at the close on Friday. The VIX decreased 3.44% for the week to close at 2190, the lowest level since April the 3rd, following the tariff announcements. I'm continuing to watch the VIX to see if we can get below that 20 level. Looking at the SPX 5-year weekly market trend chart, we can see that the SPX is trading right at its long-term averages. Its short-term averages are above where the SPX is trading at the moment, but we have seen some increases in the SPX is bringing it closer to those midterm averages. And in the short term, we have exceeded the short-term averages. When I was looking at the SPX chart, I saw a couple candles that indicated to me there was some indecision among market participants. So I decided to take a look at the intraday chart. One of the things that I noticed was when the Fed chair was speaking, we did see a big drop in the SPX, but by the end of the day, we pretty much ended up exactly where we started after all of that. Then on the 8th, we gapped up by about 0.5% or so. And after all the trading throughout the day, below that open and above that open due to the excitement around the UK-US potential trade framework, we ended up pretty much where we started the day. And then again, from the close on Thursday to the close on Friday, a lot of buyers, a lot of sellers, some buyers, a lot of sellers, buyers, sellers, buyers, and finally we ended up pretty much where we closed for the day, not very far away. So after all this weekly trading, we ended up down 0.47% on the week. As far as economic data releases upcoming this next week, those that I will be watching closely on May 13th will be the Consumer Price Index. On May 14th will be mortgage applications. May 15th, jobless claims are released along with the Producer Price Index and retail sales. And on Friday, May 16th, we have the release of building permits, housing starts, and the Michigan Consumer Sentiment Report. Given we had a Federal Reserve rate decision this week and the press release, I wanted to share an update on what the market is pricing in for rates this year. The CME Fed Watch Tool shows no rate cuts for the June meeting. Rate cuts are expected at the July, October, and December meetings. The market is pricing in 2 additional rate cuts for 2026. I hope this market overview is helpful. Thank you for stopping by today. I wish you the best in your investment journey, and we'll be talking later. Thank you.